Is this quarter, for margins, for the cost pressure, is this going to be the worst of it for your company, the fourth quarter of this year?
Well, thanks for having me today, first of all, Jonathan. And what we saw in the third quarter are a few factors playing out. One is certainly some cost pressure, but I feel really good about how our teams are managing that pressure, and it shows up in our third quarter results. Our top line grew 12.7% comp. Traffic, guests continuing to turn to Target stores, up almost 13%. And while there were some puts and takes in the P&L, we had 9% EPS growth on the quarter. So I feel really good about the third quarter results and how that positions us for the balance of the year.
You went through some of the strong numbers there. Just to repeat that question, Michael, do you think we have seen the worst of it in terms of the cost pressure, or is this something we have to live with through next year?
I think it's tough for anyone to predict exactly the cadence of how things will play out. But the thing that gives me a ton of confidence is we've been managing a lot of variables in the macro environment over the last year and a half. And we've got a model that's extremely durable. Regardless of the things thrown at the team over the last year and a half, the thing that's been consistent is sustained top line growth, sustained share gains. And so while I can't predict Q4 or next year with any perfect degree of certainty, we're excited about how we're positioned for the fourth quarter, and our guidance of low single digit or high single digit to low double digit comps reflects that.
That word you used there, durable, the durability of the strategy at Target. Michael, help me with this. We're definitely protecting price. We're seeing cost increases that are higher than our retail increase. You are protecting price. How durable is that strategy, Michael?
We've seen extreme durability in the model. And the way that plays out is in a few ways. The third quarter, you could see a piece of that. We had some pressure on gross margin, but we also saw wonderful expansion of SG&A because our model leverages so well when we're getting a strong top line, and we've gotten that strong top line. The other thing I'd say that's a huge piece of our durability is the balance we have across the categories in which we sell. We saw in the third quarter double-digit growth in everything from apparel to food and beverage. And for us, that just means there's so many ways to drive a trip to Target, whether it's the stock up your pantry trip or whether it's like it is in my house, a couple of daughters shopping for a new dress. And so that gives us real balance to be able to drive relevancy, regardless of where the guest is at.
So I've bought the Christmas tree already. I'm front-loading my holiday spend. And Michael, I wonder how many other people are doing the same. As you get a read on the fourth quarter, as it starts to build October into November, is that what you're starting to see on the floor as well?
We've seen a strong start to the holiday season, but I'll tell you, Jonathan, we've seen real strength across all the seasonal moments of the year. Whether it was Father's Day, Mother's Day, 4th of July, we just had an incredible Halloween season. And the Target model shows up really good in those holiday moments, given the versatility we have across categories. The other thing we're seeing from the consumer is a consumer that's shopping us in multiple ways. Returning to stores, we saw our stores business grow over 9%. That's on top of 9% plus growth a year ago. And digitally, with almost 30% digital comps. And so making it easy for the guests to shop on their terms is so key to our strategy, and the continued adoption of things like drive up and order pickup and having a shopper shop the store and bring it to your doorstep. Guests are leaning into those behaviors, and we observe them to be sticky, and they're growing this year on top of all-time highs last year.
Michael, access to goods is just massive. If a lot of people see things might be back-ordered, not in stock, they'll avoid buying it altogether. You know that. I just wonder, when it comes to inventory, what do the levels of inventory look like that you're carrying at the moment, Michael? How easy has it been to build them up over the last month or so? Is it getting easier?
I wouldn't use the word easy, and that our teams have, like they have for the last couple of years, been navigating a lot of challenges. But I feel really confident in the output of that incredible work. You can see on our balance sheet, inventories are up over $2 billion to last year, almost 20% to a year ago. And that tells me we're well positioned to support a strong holiday season.
I'm just looking at what you've been doing, chartering ships, unloading more cargo at night. Michael, when you look at the supply chain and the changes you've had to make, the things you've had to do to make sure that things run a little bit more smoothly, can you walk me through what you think might be the new normal, the things that might be staying with your company for a while?
Yeah, well, some of the things you just mentioned for us are actually the old normal and the new normal. Some of the capabilities the team has built over the last several years, to use the ports example, operating 24/7 in the ports, that's something we've been doing as a retailer for quite a while now. 60% of our inventory happens at night, and that's good for us, and that's good for creating capacity for other retailers to use those daytime slots. And so those capabilities and the work the team has done to build them out over years are certainly serving us well in the current environment and leading to an inventory position for the fourth quarter that we feel good about.
Michael, just a final question, if you'll indulge me. Stock's down 5%. It's had a massive run in 2021. It's up by some 40, 50%, 43% year to date now. Michael, what's your message to investors dropping this stock this morning?
I'll go back to a theme that I've been pretty consistent with, especially over the last couple of years. And that is, we've got a durable model that centers on growth. And we're going to make the right investments to continue powering that growth. And that's what we expect for the fourth quarter. We're bullish on what we expect the holiday season to look like. And I'm confident the team will put that together from the top line to the bottom line in a way that we feel great about.